Welcome back to the Brent Bruce Daily, where each day we take a look and see where home loan interest rates really are, what is making them move, and what to expect for the future. Today is June the 2nd, 2023. It is now 4:35 p.m. Central Time. The bond market and mortgage-backed security market are closed for the day and for the week. And this morning, as you know, we did get the big report that we were waiting for on employment. The Bureau of Labor Statistics put out their jobs and employment numbers covering the month of May. And this was highly anticipated because, as you know, this report comes out once a month and it can be very influential. It can hurt us or it can help us when it comes to home loan interest rates. And we've really seen this year this report being pretty hurtful to us time and time again. And this report came out today expecting the headline reading was expected to be at about 190,000 job creations. It came in on the headline reading at 339,000, job creations, much stronger than we had expected, which usually is terrible for home loan interest rates. We're going to take a look here and dig a little bit deeper into this report. Then we're going to show you how mortgage-backed securities responded and where we are as far as our home loan interest rates now. So let's take a look and see here. I pulled up this little chart here. Again, this is courtesy of our friends over at MBS Highway. They always do a great job digging into this information and giving us their insights as to what they see. Now, this is the BLS business survey, okay? And this is really the headline numbers. So the business survey is what came in at job creations of 339,000 versus the expectations of 190,000. So much stronger than expectations. But this is also the report that has really raised everyone's eyebrows because over the past year, really here in 2023, they started doing their calculations just differently. And it's strange how these entities can just say, well, we're going to do things differently than we've done for the past 20 years. And all of a sudden, how do you do your expectations or your forecasting when now we're having to relearn the way that they do their projections? So now they're really weighing heavily on this birth rate or birth death ratio. In this case, this month, it increased this number of 339 by 231,000. This is not a little adjustment. This is a huge adjustment. And really, to show even more of where we question these numbers that are coming out on the headline BLS report, they also do a household survey. And in the household survey, they actually pick up the phone and talk to people and ask how their employment situation is looking. And in this case, it shows a loss of 310,000 jobs. So look at the variance, 310,000 jobs lost when you call households, yet 339,000 gained when you call businesses, and then do just a little bit of adjusting here. Well, we want to make a few adjustments. And all of a sudden, we have tremendous job gains in this country. Very interesting how that happens lately, just really this year. So let's take a look and see where we're at on our charts here. We are currently ended the day down 34 basis points. Now, we were down a little bit more heavily when the report first came out, but again, knee-jerk reaction. Things settled down a little bit. Now we're down 34 basis points for the day. The 10-year Treasury ended up 10 at 3.7. This is even more concerning to me than being down 34 because I don't like it getting closer to that 4.0% number. When we look at the chart here, we see that we had a great Monday, Tuesday, Wednesday, Thursday, and then we're not having such a great day here on Friday. Again, this was Monday. Actually, it was a holiday. So Tuesday, Wednesday, Thursday, and Friday, we went up and lost basically most of, if not all of the gains that we received yesterday. So with that information, you can already project probably where we are as far as our home loan interest rates on the Brent Bruce Daily. So we're going to pull up a very well qualified 30-year fixed conventional home loan here. And we are sitting at, let's go ahead and pull this in. And that was just United Wholesale giving me a call talking about a loan transaction. All right, so the loan store currently is winning today at 6.875% with a little bit of a credit, $230. Again, probably what you expected after seeing us pull back to the numbers that we were at by the end of day yesterday. So we open this up here and take a look and see where that 5.99 is sitting. About 6% is costing 1.8. Again, a little bit worse than we ended the day yesterday. Let's go ahead and take a look at our friends over at United Wholesale who are just giving me a call. 6.875% is costing $1,148, but 5.999, look at it, costing 1.902. So United is not as aggressive as they have been previously. They kind of pulled back a little bit on their pricing. And here we are as far as the scenario that we'd like to take a look at. Now, going forward here, we're going to have a really calm week next week, but after that, we're going to have a big week where we're going to get the CPI reading, the PPI reading, and the results from the Federal Reserve and what they're going to do with the federal funds rate all in one week. So it's going to be a very big week, not next week, but the week following. Of course, I will keep you posted on all that is happening day to day. Make sure that you like, subscribe, share, hit that notifications bell in the top corner. I will talk to you again later. Have a great weekend.